Hello, wealth hackers. Hope you're all well and healthy, keeping that physical distance away from those non-household members. Physical distance, again, the physical distance, not touching anything in public. That's what I'm teaching my kids. Even before the virus, I was always teaching my kids to wash their hands and that assume everything in the public area, in the public realm, was assumed to be dirty. I actually sing this song to my kids, in case anyone knows a Lego movie. You know how the Lego song goes, how everything is awesome? Everything is awesome. Instead, I sing to my kids, everything is dirty. Everything is dirty. Oh boy, I can only imagine what the reviews are going to look like. How would you teach them to use their sleeves? Oh, let's lead by example, teach by example. I use my sleeves, I use my shirt when opening like public door handles. I'll generally try to avoid using handrails, but I'd rather them use a handrail and rail not fall versus catching a cold. But man, this COVID-19 is way worse than that. I'm not trying to make light of how nasty this virus is. Conversely, at home, I'm eyeing my vegetable garden space and look forward to being able to pay more attention to it this year. And I want to see my kids play in that virus-free dirt, build up all those good antibodies. On the real estate side, we've had 2 tenants reach out who have been laid off by work and asking to use last month's rent towards April's rent. It wasn't like I see a lot of stuff posted on social media. They're not asking for a rent strike or anything like that. They were wanting to work with us, and we were more than happy to work with them. We did have one student tenant reach out asking if they didn't have to pay April rent, and then Cherry just pushed back asking, are you under financial hardship? And their answer was no. So then rent is due April 1st. So as far as I know, they paid. So we have 2 out of 30 of our tenants, including our commercial tenant, that's only 2 that have reported in having issues with April rent. So if any investor out there is having issues with collecting rent or not sure what to do, please feel free to reach out, email myself, DM me on any of the social medias I'm on. Myself or my team members will get back to you. We can hop on like a 15-minute call in case you need like a quick summary on an action plan on what to do in these extraordinary times. We've let our tenants know that the ones that can't make rent for April, I'd let them know that's fine. And if they have any further issues, just please let us know. We even asked one of our tenants who is a single mom with marketing experience, we asked her for her resume as we're actually hiring for that area. Again, we're looking to work with them and possibly employ one of our tenants. With mortgage and all sorts of bills deferrals available out there, we're not overly concerned yet. My city of Hamilton, where I invest, they just announced that they're deferring property taxes as well. So we're not that concerned about our ability to make ends meet cash flow wise with our portfolio. So I hope you're all doing just as well. If not, let us know, and myself or my team can get back to you. I don't care where you are in Canada. The rules in Canada. The banks that I use are probably similar to the same banks that you use. So again, we're more than happy to help in these extraordinary times. We do have one house that we're in the middle of refinancing. This is just an interesting story in case any of you are in the middle of acquiring property or refinancing. The appraisal process is something I have never seen before in my 15 years experience. A drive-by appraisal, as it's called. In my experience, they take pictures of the exterior, specifically the roof, to make sure that's in good condition. They're looking these days, they're often usually more the insurance people are looking for like handrails and stuff like that. Just make sure the overall condition of the property looks reasonably good. Like we've seen that before. But what's new is they gave us a checklist of photos that the appraiser requires. The appraiser themselves gave us a list of photos they require. They wanted all bedrooms, all bathrooms, the electrical panel, the furnace, the air conditioner, inside the garage, kitchen, living room, family room, all those sorts of things. Pretty much a picture of every single room in the house. What's new again though is that they wanted pictures of mechanicals. Haven't seen that before, and I'm happy and more than happy to do so to keep the lending going, and from while we're maintaining physical distancing, but for all parties, including my tenants who are 2 single ladies and they prefer to just have the home to themselves. So appreciate what our lenders are doing, and fingers crossed that our financing gets approved. The appraisal value came back great. We just need the financing to come through. As these are extraordinary times, we at the Truth About Real Estate Investing show, we're increasing our number of episode output to twice a week. We have quite a backlog. About 2 weeks ago, Cherry and I decided that we would do a series of webinars, live webinars, specific to these extraordinary times. So coming up, we have a stock market update with best-selling author of the book Get Rich with Options, Lee Lowell. Lee shares when he thinks the bottom of the stock market is and the strategies and stock picks to maximize returns after this 30% market correction thus far. Last week, my guest was Sarah Copeland. If you haven't listened to that already, she is a multifamily expert. She has lots of tenants in her own property management company. So what she's really talented with is in her communicating with her tenants during these talented times. She wrote letters to her tenants, and those letters are available on our website, on her show episode page at www.truthaboutrealestateinvesting.ca. So it's in the show note. Links in the show notes. Go get those letters if you haven't already communicated with your tenants. I'm just gonna update the document because I had the wrong URL. Coming up, we have certified financial planner Kathleen Vandenberg. I've already done the recording. I did the recording just late last week, but we're catching up on episodes. She is our MBA in CLU as well. She also owns 13 in real estate investment properties. So she's my kind of CFP. She's sharing her advice to her clients to defer mortgages, payments or not, how to pivot their finances during these challenging times, and how she's up $37,000 on her stock hacking journey by taking advantage of this recent bump in price. She also let me know that she liquidated all her positions on Friday as she feels there's more pain on the way. She shares the details of what she's done stock hacking wise, and again, her financial planning advice to everyday people. Most of our clientele is real estate investors though, so I think that applies well to this audience. We have best-selling author of I forget how many books. I thought he wrote 10. I think maybe 6. Anyways, he wrote a lot of books. Either 6 or 10 that's an extraordinary number of books. Author of Money for Nothing and Your Stocks Are Free, which is required reading of the Stock Hacker Academy. Best-selling author Derek Foster, who resides in Ottawa, Ontario. We had him on the podcast back in the fall, and needless to say, much has changed since Derek was last on. We recorded it last night. He's sharing how he's shifting his portfolio and favorite stocks, and the favorite stocks he's adding to his portfolio at these discounted prices, including his top 5 Canadian favorite stocks and top 5 US stocks. Also where he's deciding to focus between Canadian stocks and US stocks. For small business owners, that includes you landlords, contractors, tenants, investors, realtors, employers, anyone who thinks they need to learn all the benefits that are coming out of the government, all the support programs coming out of the government. We have the lovely real estate accountant Cherry Chan, CPA, coming on the show. I'm actually going to record it live tonight. Today is April 2nd. We're doing a webinar tonight. She's been busy blogging and supporting her clients in her own rental business, which is my own rental business as well. So she's well versed in all the government and bank programs that are available to support us all in this crisis. FYI, while we're on the topic of Cherry, as I try to be as transparent as possible, Cherry funded her account for stock hacking 3 weeks ago, and without her agreeing to it, we have a friendly, her and I are having a friendly she versus he trader competition. In week 1, it wasn't even close. She totally beat me down. Cherry's returns were in week 1, which is just 3 weeks ago, was $4,000 US. I was break even on the week. In week 2, she beat me. We were closer this time, but she beat me by about $200 US. But she beat me. So after 2 weeks, it was 2-0. This week, I had my best week ever at over $3,000 US, but Cherry still beat me by a significant margin. She beat me by like around $2,500 US. We were both. The difference was, so people already asked what was the difference. We were both trading Dave and Buster's. However, I went for the Grand Slam. the baseball reference. I went for, I swung for the fences. Cherry hit a double. She did she did really well, and her conservatism paid off, which makes up for a large part of the delta between our portfolios for this week. So again, she won. So she is winning 3-0. Her prize is she gets to buy me dinner on date night, which is tomorrow night, as we are going to buy takeout from one of the finest restaurants in our hometown. We are making an effort to support one local small business each and every day. If you too would like to learn a new skill you can do from home or anywhere while social distancing, while on a smartphone, I do both. I use my smartphone. I use my laptop computer as well. Cherry is kicking my butt from a smartphone. I am pleased to announce Stock Hacker Academy version 2.0 in partnership with previously mentioned past guest of this podcast, best-selling author. And his book is written in 2007, and it's still a best-selling book. 30-year full-time trader, ex-Wall Street trader. So that's Wall Street, the financial capital of the world, basically, in New York City. He quit his job, though. He quit his job in New York City so that he could have location freedom to live in Hawaii, specifically Kauai, Hawaii. I think that's quite the upgrade. Any one of us would appreciate, because the increased popularity of the internet, availability of trading on the internet. So he's able to do that from a laptop in Kauai, Hawaii. He later moved to Florida. He's bounced around the US. He has a lot of financial and location freedoms in his life. Stock hacking and teaching what we call stock hacking is what Lee has done to make his comfortable living, and Cherry and I want to bring this to the world as well. I do love real estate too. Our real estate continues to grow. We're renovating 2 properties as we speak, and we're at a total of 10 income properties with 30-something tenants. But I do really enjoy stock hacking as well. This isn't a replacement. I do love the simplicity of doing stock hacking. There's no tenants, no maintenance calls. It's fun. I really enjoy it. We already have a really fun and supportive community. It's opened and changed so many lives for the better. For Cherry and I, our goal is to each create a 6-figure income each, and I can't wait to apply these investment techniques to our eventual charitable foundation so that we can invest the money in the charity in order to make a return, which would be the operating working capital for the charity, rather than having to always raise donations. This is the all-new Stock Hacker Academy. I've taken all the feedback from the past courses and we've redesigned everything, rebuilt this from the ground up, starting with bringing you all Lee, who is considered the godfather of stock options. And he will be teaching his top 4 strategies that everyone should know during this current market correction, and how to benefit during the eventual recovery of the stock market. For those who don't know, market's already down 30%. All of this will be taught via live stream. The plan was to bring Lee to Toronto, but of course, I don't think the travel is considered Lee coming to Canada essential services. I think it is, because we're going to change lives, giving people another avenue to make money, give them freedoms. But we, like I mentioned, we need to practice physical distancing. We can't get Lee over the border, so we're going to live stream this in a social distance friendly format via a weekend boot camp, followed by 8 weeks that will be lecture-based format delivered by Lee. All students will receive Lee's newsletter that he's been writing for the last 15 years. It's written in everyday language that he writes himself. He details his trades in plain everyday language so anyone can do it. How do I know? I'm a paid subscriber too. Yes, I also pay for Lee's newsletter, and it's excellent. It's been a lifeline in these extraordinary times, and it's saved me a bunch of money, as he's been right about his timing of the market thus far. For anyone interested in the newsletter, I have a special agreement with Lee to get it to my friends for a preferred price that'll be cheaper than what I'm paying. On top of the Stock Hacker Academy, we will be hosting monthly meetups in our new offices, the Wealth Hacker Hub, as I believe that continuous and in-person learning is a must. There's nothing like looking over the shoulder of a fellow stock hacker's phone, or just handing them your phone for help. Cherry did that today as she asked me to change her base currency to report in US dollars. Yeah, US dollars. We're making money in US dollars at this really high exchange rate, which is a nice benefit. It's good times. Yes, this isn't for everyone, but I say real estate investing isn't for everyone. It's really up to the individual if they want to do it or not. So please ignore all this if you have no interest. But as my friend Brian Zammit said, so the same Brian that came on this podcast and shared how he achieved financial freedom for his wife and kids in 2011 because of the stock hacking investments he made at the bottom of the 2008 financial crisis. So within just a few years, Brian and family have financial freedom. And then Brian messaged me saying how he's been waiting the last 12 years for these next few weeks. There's nothing more that I want than for all of you than to be all Brian Zammits within the next 2-3 years for you to grow this wealth hacker community so you may all have the freedoms of work, location, finances, stress, have freedoms from stress, and support your local communities. As such, we do have a promotional price right now for $2,997 plus HST. That's good until April 22nd. Anyone can learn how to earn a 6-figure income in 30 minutes a day. Even if you can't make that money today because you say you don't have a large enough bankroll, just like I teach my kids, you can't yet. It all starts with believing in oneself. To register, the website is www.stockhackeracademy.ca/special offer. I'll slow down. www.stockhackeracademy.ca/special offer. The program starts April 25th via live stream, followed by 8 lecture-based webinars by Lee himself. I've asked Lee again to focus on teachings and stock picks that will maximize returns for the eventual recovery. Funny enough, the course takes place during the same time that Lee predicts the market will hit bottom. The timing honestly could not be better to take advantage of the opportunity before all of us, and I can't wait for that. This and so much more we're doing to support all of you, the greater wealth hacker community, and to our healthcare community. We're actually expecting delivery today of 200 KN95 respiratory masks. So these are the masks that are worn by Chinese health professionals. We ordered them direct from China because we did not want to burden the supply chain that's here locally. We ordered them directly from the manufacturer in China because their issues are declining, so they have capacity. They have supply available. We'll hang on to a couple masks just to protect myself and my family. But we'll donate the rest to our friends who are on the front lines of this crisis. One of my clients who is in healthcare, she's informed me that the hospital does not have enough supplies. So, I'm grateful for the opportunity to be able to help where possible. My realtor business is definitely slowing down. Many of you, in case some of you don't know, open houses and showings of occupied homes has completely halted, because we have our health and we have the health of my team, myself, homeowners, tenants to be concerned about. But we have our health, we have some savings, and we'll do what little we can to support the community. So on that note, again, if you are a stock investor or a real estate investor and you need 15 minutes to talk, let me know. My team or I can get on a call with you to provide some support. And it doesn't matter if you're in Canada or the US. Just drop me an email, DM me on any of my social media. I'm not that hard to find. Never forget, we're in this all together. Shout out Forza Italia to my Italian friends, specifically Italy, for reducing daily cases. We all need as much positive news as we can get. So on to this week's show. We have mortgage expert Claire Drage. Claire's been through this before. Claire is an active member of the mortgage and real estate investing industry for more than 30 years. She has experience from all sides of industry, from managing over 140 properties in Spain to growing her own successful mortgage brokering business in Canada. She's a past guest of this podcast as well, so hopefully most of you are already familiar with her. She has consistently been in the top 1% nationally with Mortgage Alliance, and recently has grown a team of agents, the Windrose Group. The Windrose Group team focus includes cost of funds, asset protection, minimizing tax burdens, aligning acquisitions and exit strategies together with ensuring access to cash. So without further ado, I give you Claire Drage. There's a lot of confusion out there. For example, a lot of people think that you can wait to file your taxes, but actually, if you want a lot of your benefits and credits, you actually have to file on time. So it's kind of like you can do this without penalty, but you lose all these benefits if you don't file your taxes on time. And there's and that's why we have Claire here, because again, there's plenty of confusion around this whole mortgage thing and deferral thing. If Savio is on here, I want to thank Savio, because Savio took a screen capture of the internal memo for one of the main banks around deferrals. And then there's actually John Romanis, who I sent it to my friends and my friend John in the chat group, and he said there's some misspellings here in an internal bank memo. and just to make the point is, this is all rushed. Of course, this is all rushed. So there's problems and there's confusion. And I posted there's an article today in the CBC. I think it was the CBC about how people are getting different answers depending on who they speak to at the same lender. So that's why I wanted to reach out to Claire. Claire's been in this business for 30 years of being a mortgage professional, and she went through 2008, 2009. She's been quoted heavily around being cautious around the use of mortgage deferrals, which is why I really wanted to have Claire here. Claire, is there anything else you want to add? You have a massive team. You do a lot of volume in the mortgage business. You're quite well known. You're an investor yourself. Yep. You do second mortgages, probably third mortgages in case anyone needs money or anyone still has money to lend.
Well, that's the challenge right now, is that there is lots of opportunity. People's lines of credit have just gone down by 1%. So if they've been on the fence about even being a lender, there's actually good opportunity now too, right? So it's kind of, you're right. My specialty is working specifically with real estate investors. I like burrs and flips. I finance a lot of those. And yeah, it's kind of, there's opportunity. And the challenge, I think, sometimes is I always feel guilty bringing it up because I don't want opportunity to be construed as taking advantage. So if you've got access to a line of credit and your interest rates just dropped by 1%, then you have an opportunity, leverage smartly, to help another Canadian through a tough time using real estate as security. So it's pretty cool.
Yeah, it's unfortunate that we have to be cautious with the words around opportunity. Like, if nothing else, we all know there's a housing shortage. So who else is going to provide rental supply? It's not the government.
No, because they've proven they can't do it very well, or with decent quality anyway.
Yeah. I'm a landlord and I'm drinking. Manny, where's your drinks? I saw you been blasting all over Facebook your rants. The LCB is open.
I got my Corona online, but I got Corona online, but I'm keeping it away from the video here.
Do you really? I was just in the States and we were drinking Corona beers.
I thought I'd throw that in there.
We were drinking Corona beers and it wasn't even on sale. So I was chirping Charles about it, but yeah, another story. So Claire, what's the number one question you're getting these days? I'm pretty sure I know what it is.
You know what? I think the number one question is, how do I defer mortgage payments? So, that number one question being, I've been told the government is going to help renters, be able to cover their rent. And then also, of course, you can defer your mortgage payments up to 6 months. So the first question is, how do I do it? And I'm like, whoa, let's just hold the horses and back up a bit here. Because it is really important that it's kind of, there's two ways of looking at it. Let's look at it as a regular homeowner. So you don't own rentals, you're a regular homeowner. The only real estate you own is your primary residence. And maybe when you got that primary residence, your ratios were tight. And since then, maybe you've bought a new car, maybe both of you are working, and one or both of you has lost your job. If you don't have a backup and you don't have resources, then deferring your mortgage payment could be a short-term solution. But it's not free, and you will pay interest on it, but it won't impact your credit rating. So it won't impact your credit score. as long as the banks and lenders report it accurately. But you do have to understand that when you call up the lender, one, you could talk to 3 different customer service reps at the same bank and probably get 3 different answers. So it is a bit of a crapshoot on who you speak to, but they're trying to figure it out too. So the key thing is, number one, you've got to apply for it. There is an application style process. 2, you've got to declare financial hardship. So you're declaring to your lender financial hardship. Now, as a regular homeowner, and if you and your partner have lost your job, that could be genuine. And you need to be able to prove financial hardship. What the lenders are trying to do, I mean, imagine even if only half the Canadians that have mortgages are calling up their lenders to defer payments, and not necessarily all of them need that assistance today. They might need it a week or 2 weeks from now, but the lenders are overwhelmed. Like, you know, the customer service staff are overwhelmed, they're short-staffed as it is. So if you're a regular borrower and you need assistance, call. But you are declaring financial hardship to your lender. That will go on record. So I think you've also got to be cautious of your ability to apply for credit later on. It's not free. You do have to pay it back at some point. And of course, interest on interest. If you don't need it, it's not worth paying it. The other side of it is let's talk about investors. So unfortunately, I've seen a lot of investors who have gone, whoa, I could have no payments for 6 months. Imagine my cash flow now. You know, if I'm still getting my rent and I've got no mortgage payments, my cash flow would be crazy. Again, I will caution anybody calling up their lender. You are declaring financial hardship. So for some, you know, 2 weeks into, or 10 days, actually not even a week into a state of emergency in Ontario, and you're declaring financial hardship, that is permanent on your record. So when you go and continue to grow your portfolio in the future, what sort of impact will that have on your ability to qualify? And again, it's not free. Some lenders aren't doing it on rental properties anyway. They really are asking you to go through their application process. And basically, you know, if you've got assets, you've got liquid assets you could use, naturally, they're going to want you to do that because you aren't in financial hardship. I guess the other thing would be, what do you do if your tenant says, well, I ain't paying? I've talked to many investors over the last few weeks about explaining to your tenants that you have a process to apply for rental deferral. And, you know, treat it like a business by saying we have a process in place for situations like yours. So number one, I need you to send me an email. I need it in writing. I need you to apply for rental deferral in writing. And then we need you to provide verification. Maybe it's record of employment. Maybe it's a notice from your employer confirming you've been laid off. And then I would indicate, I'm going to take this information to my partners and we will get back to you with a potential option. Now, I also would suggest you remind your tenants this isn't free. You are going to have to catch up at some point. And all I'm saying is just proceed with caution. If you've got resources, don't jump on the bandwagon to have free mortgage payments unless you really need it. Understanding long-term repercussions could be that lender might not extend credit to you in the future. It's not like we're 4 months in. You know, we're 2 weeks, maybe a month for some, but for a majority, we're maybe a couple of weeks in, depending on the province that you're in. That was a long way of answering that question, but that's primarily what I'm seeing. And I'm just saying, I'm not saying don't do it. I'm just saying understand the consequences of it. Does cost you more to do it. Do you really need it?
Would you suggest an N4 as well?
Yes. So my understanding is, based on the discussions I've had with paralegals that are specialists with tenants, is issuing the N4. I mean, we all know that, you know, evictions are banned or there's no evictions for the short term, but I think it's important to have your paperwork in order. I would definitely say I'm not an expert in that area, but it's worth spending a few bucks to get advice from a paralegal.
That's what Claire's. There's actually some people in the chat, and I actually know some people on this group already. They've, again, I've heard lots of inconsistencies within the same lender, even the same branch. The article that I shared on one of my groups, for example, the person they interviewed was the former branch manager of that branch, and they told him they wouldn't defer his mortgage.
Which again, it's really hard when we see, I would say, no different to applying for a mortgage. Everyone's situation is very different. I mean, don't get me wrong. When you call up and say, hey, it's Claire Drage, I want to defer my mortgage, straight away on their system, they know all your assets from the last time they took an application from you. They know your credit rating. They know if you happen to be banking at the same bank with day-to-day banking. They exactly know all your history. So, you've just got to be careful that are you making a false statement?
Mm-hmm.
Are you taking away the benefit from someone who really needs it? And do you understand the consequences? Like if you're a good landlord and a good business owner, I'm sure you can survive at least a month or two without needing to defer your mortgage. But again, I would say everyone's scenario is different. I mean, it's not a good example to allow the bank manager, who obviously probably has an ex-bank manager, probably has an amazing pension, a strong RIF, assets he probably could withdraw from. Imagine if that hit the media. You've got a single mum with 4 kids working 3 jobs who's unemployed, and she can't get it, but the ex-bank manager of the local RBC branch can.
Mm-hmm.
They kind of have to go through that process. I don't want to kind of sound like I'm anti it. I'm not. I just want to make sure that the right people are getting it and able to use it, because we don't know when the well will run dry.
That's a good point, because it almost makes me think there's urgency. Just like there's a shortage of toilet paper, there might be a shortage of mortgage deferrals available.
I know, and I just think it's important to, if you're happy with the consequences. I mean, I would not like to call my bank and tell them declare I'm in financial hardship. I'm young. I still want to borrow money in the future. I would want it on my record for sure.
Is this something that you saw back in 2008, 2009?
No. So that was slightly different. It was almost like that was a self-inflicted issue with the subprime crash. And it was more a liquidity issue with the lenders. So it was more like they were running out of money and could never have offered deferral because they didn't have the resources. So in 2008, 2009, it was a liquidity issue for the banks. Mm-hmm. This is actually the opposite, where there is already, government assistance to help support this initiatives. But again, the challenge is it came out very quick, very fast. And I'm sure the major banks and lenders didn't have much of a heads up when they're already short-staffed, already ramping up for the spring market, had already seen rates drop. And then it's kind of like, wham, let's throw this at you and see how you handle it.
Mm-hmm. So again, people are filling up the chats. Again, some people are getting like no questions asked.
Yeah.
I don't know if that's still the best thing. And does anyone actually, let me pick on Brady. Brady.
Yeah.
Brady, can you unmute yourself, or do I need to unmute you? Because do you have anything in writing by chance? Any of the letters and lenders?
No, well, my brother does, so I don't know the lender. It's whether it's B lender or A lender. Like he's got a normal rate for his primary residence, so he actually received an email from them, stating that they were offering it. Then that it wouldn't affect your credit and borrowing ability.
Okay. It's in writing though.
Yeah, it's in an email. We asked for Scotiabank, CIBC, and they basically asked, who are you? What is a few questions to, just identify your identity. And then they asked, have you declared bankruptcy or consumer proposal? And then it was like, hey, here's your mortgages. And they're literally like one at a time. Within 5 minutes, it was done. Right. And we did ask the questions, is this going to affect credit or borrowing ability in the future? And the answer is no. We asked, what is it going to do to our future mortgage payments? And they said, depending on the mortgage, because some of them were, obviously, when we started them, they said that it was like $25 to $50 per month going forward after. So, I mean, that's our experience.
And how many banks have you been to?
So
all of them?
We've got probably like 70 with Scotia. So we're really waiting for Scotia Bank to open up. And like, I don't know, my personal opinion is I'm not going to use every dollar in my account up before I ask for this, because like, then you're at the brink of failure. I'm much more proactive than that. So our approach is to try to address as many potential problems as we can now. To hope that we're prepared for the future, which we don't know.
Brady, how many months did they give you at Scotia? Because Scotia seems to be the most resistant from what I'm hearing.
Yeah, so Scotia, we haven't got any. So we've been relying on. So Christy spent hours and hours on hold with lots of other lenders, but we're relying on just the iWin group from getting the information. So. As of now, everything that I've seen or read was primary residence. I'm not sure if that's changing. There was somebody that posted today about, maybe 1 month on an investment property. Now, again, this is all hearsay, so I wouldn't take it as a grain of salt. So we've got our mortgage brokers waiting to try to get answers. I mean, I think everybody's doing the same. But yeah, day to day, hour by hour.
But the challenge is we're getting different answers, right? Which really is literally whoever you speak to when you call up, everyone's scenario is so different, right? We're getting some saying, yeah, it's no problem on rentals. Others going, yes, it is a problem. So it's really tough. I think it's almost, you're not going to know until you call up yourself.
Yeah, I agree. I think, I think Scotia Bank is the big question right now. I think that seems like everybody else has gotten relative decent answers from the other lenders. I think Scotia is the big player that we don't know about. And stay tuned, right? I think that's all I'm doing. I can't wait. Oh.
I think everyone here who has investment property probably has a mortgage with Scotia, so maybe they're the most not sure about this. Not talking bad about them. They seem to be going through a more. No one's reported like open and closed case with Scotia.
Yeah,
I think it's possible that the first wave is going to be a focus on those on a principal residence. So they don't lose their home, their place where they live. I can see down the road as things, progress, whichever way they're going to progress, that they'll open it up to, or be at least more open to having those discussions. Right now, I'll tell you what the lenders are telling us as mortgage brokers, which is, please tell your clients to only call up if it's a principal home and they have an immediate need, and if their payment is within the next 2 weeks. Like if they've just made their last payment and they don't have another one for a month, to not call now, just because they're so overwhelmed. People are waiting hours and hours on the phone.
Which is funny because when I was at the branch, no one judged me for being out in public, but it was quiet. There was no one in line.
I was in the bank today for a couple of closings, and in 2 banks. I was in TD and BMO, and I had to go to 4 different TD branches to find one that was open. Now my bank run is now an hour and a half. And then when I went to BMO to do a deposit into the lawyer's trust account, security guard, I had to answer 6 questions. He let one person in at once. It was like, I'm not going to rob it. I want to deposit a bank draft.
Yeah.
But anyway, but I understand the caution, right? We need to be safe.
In case you want to empty out your whole account, that's why they don't want you in the bank.
Yeah, that's
right. You want to close your account, eh? Bank's closed.
No. I thought I heard you sniff. You look like you have a temperature. You can't come in. We're not letting you.
Excellent.
But I think, in all honesty, you're not really going to know exactly what your bank's going to do until you call up. Because everyone is different, and your profile. So most people don't realize that especially with the major banks, when you call in, each bank has its own rating system. So when you call in and they see your name, they immediately look to your rating. And it's not your credit score. It's more, are you an A client? an A minus or a B or a B minus client. Like they have an internal scoring system. And I think that often that will determine the answers you're getting. And that's why we're getting so varied.
Right. So I just want to highlight one person's comment. Sanjeev Singh wrote, I spoke to TD and they did confirm. Okay, so hang on, folks. I'm reading someone's comment. I'm not saying this is true. I spoke to TD and they did confirm that there is no accrued interest, if that helps. I don't believe that. Sanjeev, please get that in writing and send it to me.
Yeah, I would suggest this isn't free.
Yeah, the bank doesn't give free interest-free money.
It's no different to, so Scotia, for example, has a skip a payment option on most of their mortgages, and some of the other banks too, where you have the option to skip a payment, and it just gets added on, and the interest gets added on. So this is more like an option to do 6 months. I mean, the standard skip a payment is no questions asked. Hey, I'm going on vacation. I just want to skip a payment. My only recommendation when anyone does call in is if you have a real need and you really need this, only answer the questions they ask you. Don't go rambling on. Just answer the questions they ask you. So I'm looking to defer my mortgage payment, and then shut up. And then just, some people talk themselves into trouble.
Thank you, Claire. What's the number 2 question you're getting before we start taking questions from folks? Holy cow, folks. We have like 26 new messages.
The number 1 question is...
Number two. We already did number 1.
I'd say number 2 question is real estate still a good investment?
Really?
Really? Like, yeah.
I see a lot of veterans here, so...
I'm like,
sure, let's answer that question. Let's go ahead.
So, is it still a good investment? Well, it's like anything else. People always need somewhere to live, and there's supply and demand. Sure, there's going to be some areas that are going to suffer or maybe see a temporary slowdown, but there is still an influx of people. In fact, there's more people living in Canada now because they've all come home from wherever they were living. So I would say real estate has always been a good, solid, long. Yeah, exactly. I'm with you, Brady. Yes. But I mean, I've got a bunch of investors, clients that are doing, 50, 80, 100 flips at once. They're not worried. It's still a good market. I mean, but could it change a week from now? Who knows? People still need somewhere to live.
Yeah, let's take someone else's opinion, like Benjamin Tall. If anyone wants to look at it, just Google Benjamin Tall CIBC Impact Report. It's free. He published on Friday the 13th how he believes that the interest rates, the low interest rates, will offset the recession. So he actually expects neutral real estate.
Yeah.
Right.
Yeah.
So again, my market, it's like up 9%. Like Manny, what's Barry at? Probably 9% as well, year over year. You're muted, by the way.
Yeah, let me mute myself. Well, I mean, up to now, Barry's been strong. I mean, anything I've sold has been
strong or crazy.
Offer, so.
Hasn't it been crazy?
Well, I guess a little bit of both. I mean, I guess Brady can attest to that as well.
Yeah, because you're competing with each other.
Well, we're not competing with each other. No, there's
competing. There's lots for everybody.
No, man, there's lots of room for everybody. We're all friends here. No, it's been strong for me. I mean, what's going to happen, tomorrow, next week, the week after that? Nobody knows, right? I mean, I can tell you that I've been getting more inquiries for people wanting to sell their homes. So there's going to be opportunity there for sure. As long as lenders are still on side. I mean, I don't know about a lot of these B lenders. Are they getting word? Are they going to hold on to some of their money? I don't know.
Oh, Claire can answer that.
Yeah.
You work with B lenders too, right?
Yes, yeah. So I would say I'm not worried about the liquidity of the lenders. The government's also brought out a bit more flexibility when it comes to holding funds on insured deals, which just creates more access to liquidity for the lenders. So I'm not worried about that at all. I think there is a lot of money out there. I think we're probably going to see a little bit of a delay on the spring market, maybe, because basically we can't. But I've still got investors that are doing just getting their realtor to go do a walk through a property and still buying. You know, our biggest challenge is getting appraisers in if we need an appraiser, getting other lawyers working. Some lawyers are old school and are not set up with technology, so they pretty much had to close down. Others are doing amazing and doing virtual sign-ups. We've got the title insurance company providing additional gap coverage, so that if people can't register in land titles, they're offering gap coverage to help with closings. So the core thing that's come out of this is there is a lot of what's the word? People coming together to find a solution, as opposed to, you know, let's just whine and complain, which I think is cool. And also I think that for some consumers, this might be a little bit of a wake-up call. In, you know, where is your cushion? Like if you lost your job 2 weeks ago and you can't make your mortgage payment, this could be an opportunity just to kind of reevaluate. Then I know there's people who are at home and they're eating their freezer and they're eating through their cupboard and they haven't spent a penny and they're actually saving money because they're realizing that they have enough resources inside their own home to survive.
Admittedly, I was at Costco and I was trying to buy toilet paper and there was none. And then when I went home, I was like, oh, I already have this unopened 40 pack at home because I always buy stuff when it's on sale. So I already had a 40 pack sitting at home, plus another 3 dozen rolls.
We're going into our stash, right? I'm looking forward to seeing the bottom of my freezer because you could probably do with the clean out.
I have a quarter cow arriving tomorrow. I don't even have room for it.
Oh no!
So Claire, so some people are reporting in that they're hearing that there's the bank is telling them there's no consequences. Like you mentioned, like there's no credit consequence, but if you defer, your payments are going to go up. There's no free ride, or at least your mortgage. So my understanding of just what I've read is your payments will go up. And then you can have the option to re-amortize your mortgage further.
Correct.
So it's not, by definition, those are still consequences, are they not?
They are, and again, we are in unusual times. But I can't help but think when you call up a lender and you say, "I'm in financial hardship 2 weeks into a crisis," that isn't going to be. Plus, also, you know, think about. You don't make those payments up. When a payout statement is requested, it's going to show them as still outstanding and it will be added to your payout. Again, I mean, is that going to be a good excuse for the next lender to go, wow, after 2 weeks, you skipped 6 months of mortgage payments. Are you really that close to the breadline? Mm-hmm. You know, that would just be, I mean, it is a bit of an unknown, but I know having gone through 2008, 2009, you know, we look at the people that went bankrupt, who went consumer proposal, and, you know, some are still trying to recover all those years later. So, and that's why I say proceed with caution. It is relationship with your lender. Mm-hmm. And, you know, I have clients that have private mortgages with me and where I'm actually physically their lender, and they're asking me in one breath, I'd like to defer my mortgage payment. Oh, and by the way, I need another $50,000 to finish that flip. I'm like, whoa, you can't like tell me you don't want mortgage payments, but you want to borrow more money. So, you know, there has to be a balance. Mm-hmm. Where are you really in hardship? So I don't put you under more water. Are you seeing everyone floating?
Are you seeing any reduction in the number of mortgage applications coming through your office?
Not at all. Not at all.
And any changes in the ability to lend?
Not at all. No changes in the ability to lend, other than the turnaround time with the lenders is awful. We are back to like 2 to 3 days. Getting an appraiser out. Some appraisers are just not going into properties. Some are doing drive-bys. We've had a few where we've able to get but drive-bys with a purview and interior pictures taken with a newspaper. So we've been able to kind of, you know, get through some of those as well. Lenders are being awesome. They really are working with us. But, I mean, they're short-staffed too, because in essence, what was 1 week of March break in Ontario is now 3 weeks. Mm-hmm. So all those people that are having to take time off to look after children that are still at home, right? and I've got nowhere to go.
One of the branches I walked into, the staff member told me that they do work from home. Anyone who doesn't feel well can work from home, but they don't have access to your files. They can use the phone and respond to emails, but they don't have access to the system. So
Yeah.
obviously there's going to be delays in people's ability to do work. And holy cow, we have 56 new messages. We're on number 7. So,
Oh my gosh.
so Tasha, can you unmute yourself and share your experience with private banking? This is why I want in on private banking. Oh, actually, while Tasha's unmuting yourself, my point on private banking is I'm trying to apply for private banking as well. I don't want to declare financial distress before I apply for private banking.
No, don't do that.
Tasha, go ahead.
I was on the phone with them today, actually, private banking, Scotiabank. Yesterday, they had told us that you could only defer your mortgage payment on your primary residence. Today, they said their rules changed to accommodate up to 3
in 24 hours.
Rental or your main residence, and it will not have any effect on your credit score whatsoever. So we were literally told that like 7 hours ago.
Right. How long were you on hold?
I was
curious. that's the private banking, ladies and gentlemen.
You don't get to be put on hold with private banking. And you're absolutely right. It will have zero impact on your credit score. Zero impact. It shouldn't show up on your credit score at all. I know the banks have got a bit of work to do. Those that do report their mortgages to your credit bureaus, they have a bit of work to do to make sure their upload is going to reflect that. And but yeah, it shouldn't affect your credit score at all.
But Claire, in like 6 months from now, say you get a 6 months deferral today, 6 months from now, won't that affect your GDS and TDS ratios because your payments are higher, assuming you didn't catch up?
Yeah. I mean, there's so many repercussions from it if it's not used correctly, right? Is, you know, if you've now owe $8,000 in mortgage payments, there's no difference. You're not paying your property taxes for 6 months. Which leads me to another thing. Some lenders are also saying you might be able to skip your mortgage, but you've got to keep your property taxes up to date in certain cities and municipalities, and any insurance that you may have on your mortgage as well.
Claire, just to update you, we have 103 people on this call and another 63 messages to go through. Number 8. So John's point about Scotia told him today 3 months for rentals, 6 months for personal. He's got a call with him tomorrow. And then do people see the pattern that there's regular inconsistencies for the same lenders? And John's a smart guy. He's a CPA MBA.
It really is whoever you speak to, right? I mean, remember, they're trying to fast hire people to man the phone lines.
Oh, boy. Okay, we're just going to skip to number 50. A great question from shout out to Linda Vitorini, who's in Spain right now under lockdown. So we'll definitely take her question. How difficult do you think it will be to get a refinance right now?
Not actually that difficult. So it's not that difficult to get a refinance, other than purchases and renewals are taking priority. So, you know, don't expect to refinance in a week or 2. It's probably going to be a month, and it could all change tomorrow. So today, I would say it's fine, but we're taking 2 or 3 days to get responses. We've also had the major technology that a majority of mortgage brokers use to communicate to lenders was hacked on Thursday, and so has been down since Thursday. So that has led to a lot of mortgage brokers having to deal with alternatives in order to submit, and that is causing some delays as well, which is unfortunate. Or not hacked, they had a security breach. But no, getting a refinance, applying for a refinance is not a problem. Just be prepared that you could be bumped to those with live purchases.
That's actually not bad, because my last refi took forever, and it was last year when things were really slow and credit was tight.
Yeah.
We have a question from Mark Baltazar. This is a great question for you. I'm glad you have you. Thank you again, Claire, for being here. How is the private lending space changing regarding access to funds, appetite to lend for flips and burrs? Like you work with these people on a day-to-day basis.
All the time. So I won't lie to you, I've experienced a couple. It's really weird because the people that have the most money are the ones that are going, no, I'm pulling out of deals. I want to hoard it in my mattress. I'm like, seriously? Anyway, sorry. So I've had a couple that have pulled out on deals that were closing, and they are just simply in panic mode. There are some people that it doesn't matter what you say, and no matter how many years, many years they've been doing private lending, they're still freaked, right? So we've had a few that have pulled out, but then at the same time, I've had a lot of people going, oh, well, my stocks dropped a bit, my overtime stopped, but I have this massive line of credit. Why don't I get 10, 15, 17% return on it, because my prime rate's just gone down to 2.95. So I've had just as many who said, no, we want our funds back, we don't want to offer renewals, or I'm not closing on that deal this week, as I've had people going, this is the right time, why didn't I do this sooner?
Claire, what is the going rate for home equity lines and unsecured lines of credit?
Yeah, so home equity lines, typically you're at prime plus a half. So a prime is obviously 2.95 now, it's dropped by 1%. So you're at 3.45. Some lenders, if you're in private banking, you're probably getting prime. Some lenders, depending on the profession you're in or what your rating or net worth is, you might be getting prime or prime plus a quarter. But I would say a majority of Canadians are at prime plus a half.
Fabulous.
So 3.45. It's like, yay, it's free money.
So I love the discussion going on in the chat group. Sean A says, he wrote, I mean, if it all goes down 50%, I think he means property prices, you still have cash flow, which is great. Cash flow wins. John Romanis' response is, if it goes down 50%, it means you can go buy it at half price. Andy Tran says, our mutual friend Charles Waugh rented out his unfinished second suite for $1,635 last week on the Hamilton Mountain. This is for a basement, Andy? And it was unfinished?
There's bidding wars, right, on places to lease.
$1,635 for a basement. Like, Manny, Brady, thumbs up, thumbs down. Is that crap? Any good? Washy, you won't take it?
Now we get probably like $1,475, something like that right now.
Fantastic. That's still great money.
There could be someone that's using this excuse to leave home. And it's causing a glut, right? Because they've had to stick around with family or friends or whatever for 2 weeks in isolation.
One thing, if I can chime in here, there is a lot of people that still want to rent. We're filling vacancies strictly on doing video like walkthroughs. That's what we did this week, and and we are literally screening tenants and placing them virtually, basically. So that's there's still people that want to move, and they're still paying top of market rent for sure.
Will they live in it virtually as well?
Ideally, yes. As long as they don't pay for it virtually.
Just set up webcams for them. Imagine just visualize yourself there.
You can live in your parents' house and pay me $1,400.
That's awesome. It's so effective, right? I mean, that's one thing where you've got to wonder if that might become a bit more popular in the future, right? To be more efficient.
And folks, I highly recommend you do, like Brady mentioned, as much virtual marketing of your vacant properties as possible. Videos, even Zoom tours if you have to, FaceTime, anything you can do to do virtual. Keep that cash flow coming. There is no excuses. This is time to double your effort. Claire, anything changing around lending around second suites? There's a lot of people. I know there's a lot of investors here with second suites. In a row, I have Brady, Andy Train, and Manny Cabral.
No.
There's a lot of basement suites right there in that row.
No, not a challenge at all. I mean, I think the key thing is if you have a lease and you know exactly what you're getting, and obviously that after repair value is going to be much higher. If you actually have a lease, I definitely wouldn't want to rely on an appraiser to give me market rents right now. Just based on what we're seeing in the market, because we know that you can rent higher than market rents. So get a lease before you refinance.
And I have a question unrelated to the current situation. A lot of us are considering additions or tiny homes on our existing property. How is that being treated? Is that would that be treated no different than like a legal triplex?
No, well, yes and no. So the lender's rule of thumb is, so let's assume I have 5 acres. So the rule of thumb is going to be the home plus a detached garage is the asset that's going to be used in the appraisal as value. So the minute you put a tiny home on, it's not necessarily going to get that value. There are a few lenders that will consider it as long as it's kind of permanent. Otherwise, it's pretty much like a mobile home. And mobile homes secondary on an existing piece of land. I mean, mobile homes are, the CLIP program, which is a collateral loan instead of a regular mortgage. So as long as you've got enough in value to encompass the tiny home, there's nothing wrong with putting it on there, but they just might not use its actual value in the appraisal.
What if it's an addition? What if it's actually attached to the existing home?
That's fine.
Would that help?
Attached? Oh yeah, definitely. Because it would deemed to be an addition, right? It would just be no different adding a secondary unit or a secondary suite.
Oh, but we're talking about a third.
Yeah, or a third. I mean, if it looks like a carriage house, we do have a few lenders that will take the value of a carriage house.
Okay.
But that's usually because it's got a garage in it.
Okay.
Right.
So based on today's lending environment, an addition makes the most sense, or at least attach it via breezeway.
Yeah, definitely. Lenders are just not, it's new, right? And they're like, ooh, we don't know. Are the bylaws going to demand that you remove that tiny home? Are the neighbors going to complain? So they'll still do it. They just won't include the value.
Right.
Any financing you're looking for.
Andy Tran, can you mute yourself? Has anyone actually done one of these things yet? And while you're unmuting yourself, we're going to get to number 9 of 79. This is a really good question from Michael Deck. I'm going through a refinance already, had appraisal just waiting to finalize with a tier 1 bank. Is there any reason why they would turn me away because of what's happening in the current environment? I kind of need the funds for stock and to service my mortgages.
No, there's no reason. I mean, there has been, we have had a few cases where, for example, let's assume you work for Air Transat and they've just announced that Air Transat's laying off all of their staff, that are cabin crew, and you happen to be cabin crew for Air Transat. That might put a blip in your plans. They may question it, but right now there's so much government assistance. They're pretty much saying, if the government's topping up your income and or it's deemed to be short term, lenders aren't blatantly saying, well, yes and no. They have to cover their butt, right? They don't want to see on social media that we declined you because you just got laid off. They would do that on normal times, but we're not in normal times right now. I had one last week with a colleague of mine who they're self-employed and their income was great. It was with a B lender, but they declined it because the type of work they do is in close contact with other human beings. So therefore, they declined it because didn't feel that their income could be sustainable. And I kind of get it, because the bottom line is, if you are out of work, you still need to physically make the payment, right? You still need to physically have the cash coming in to make the payment. I flipped one last week. We had challenges with it to start with, even before COVID-19, and we just shipped it over to a private deal with no payments for 6 months. Enough equity in the property to add 6 months of payments into the loan, just to see some clients through this time.
Here's a good question from Mark Leframbois. I think hopefully I got that right. Not asking to get a referral now, but I need to know if they will allow in May or June in case a good portion of tenants decide not to pay rent. And something political. So what do you think is going to happen? Do you look into your crystal ball for May, June?
You know what? It's tough because we really don't know. The bottom line is, if everyone and their dog is asking for their mortgage to be deferred, is there going to be a point where there isn't much left in the coffers despite the government bailout? Who knows? We just don't know. I didn't know that liquor stores were an essential service until today. So
And
like,
marijuana stores.
who knows?
I hope restaurants can still open for takeout. Like, come on.
No.
Yeah, my friend John, who stepped away from his desk, made a good point. Like, what kind of economy will we come back to in 6 months if we're under lockdown for that long? Lockdown and no restaurants and no small businesses can operate. Like, I'm guessing Home Depot is considered non-essential. How are we supposed to continue with renovations?
I don't know. I mean, it's you know, I think that we're going to come out of this stronger than we are going in. I think for some people, it's a great chance to reevaluate, reconnect, and see, you know, other opportunities.
Mm-hmm.
I mean, I think you have to think that, otherwise you'll go crazy. Like, it's crazy enough dealing with your kids at home, or, you know, the in-laws living with you, or whatever your circumstances might be, right? I think we have to have faith and have hope.
And in case anyone thinks that the new construction market is going to take a downturn, understand that there's actually significant supply issues. So the cost of materials is actually going up, and not everyone's willing to work. So the cost of labor is likely going up. Therefore, by economic definition, the replacement cost of housing is going up. Therefore, you should expect your housing costs to go up.
Yeah.
So we have a question asked by two people. I think it was Richard Marquez and also Rob Chain, asking about our HELOC refinancing. Is that affected in the current environment?
No. Again, lenders are taking applications. Their turnaround time is just not where it used to be.
Excellent. Yeah, Christopher Lewis is reporting that he just refinanced 3 properties with Scotian just a few days ago. So again, that things are going well. Oh, okay. Linda is not in Spain. Thank goodness, Linda.
Oh,
I thought you were in Spain. I was like, good God.
my family's
glad to hear you're at home.
all my family's in Spain, because we used to live in Spain, right, for 11 years. So they're all in Spain right now. They're in serious lockdown. Like, there is
You can't even go for a stroll, right?
Oh God, no! My father-in-law, stupid guy, went out for a stroll, and the Guardia Civil were right there to march him straight home.
With no additional punishment, right? At least.
No, just this army dudes and big guns is enough to freak anyone out.
So this has been common advice. I think I might have mentioned it earlier. Like I've practiced this because I've been taught this before. When someone offers you credit, you take it. Claire, you're nodding your head.
You know, if you're being offered credit, absolutely. I mean, if you're still getting those offers, you know, in the mail to increase your credit card limits, take them now for sure. Because we all know banks give you money when you don't need it. So if you've still got some of them in your recycling bin that you haven't shredded yet, pull them out and take them. Because we don't know. Again, we're in unusual times, right? I wasn't around when the Spanish flu hit in 1919. So I don't know what's going to happen.
The forgotten pandemic.
Yes.
Oh, what are current rates today? What are you seeing for variable and for fixed? 3
So
and 5
variables, if you're applying for a new variable today, we have seen the discount shrink. So remember, the Bank of Canada dropped their prime rate, or the prime rate has dropped to 2.95. So before, we used to get like prime minus 1 or 1.1, which would get us under 2%. But what we're seeing, if you're applying today for a new variable, we're kind of seeing prime minus 0.2 to prime minus 0.6. So the discount has shrunk a bit. Remembering, of course, that the whole stimulus for the Bank of Canada is to help keep businesses afloat that have large operating lines that need that break on the interest rates.
Very good. James Kaufman has a question. I'm not sure if you can answer, or even I can answer. What kind of payment plan should I put my tenants on? Should we cap how much they can defer?
I think it's case by case, right?
Yeah.
You know, what is your policy? I think you've got to create a policy as a business owner and kind of go, okay, our policy is request it in writing, provide verification, I'll consult with my partners, and we'll create a plan. I mean, if you've got a tenant that's been a pain in the ass and is always late, and they're using this opportunity to go, wait, no evictions, I think that's different to someone who has always been good, looks after the property. I think if you can afford it as a business owner, it's good to help and support. I have recommended to my investors, please tell your tenants that you may not qualify to defer your mortgage payment, because there is this misconception out there that all tenants think every landlord doesn't have to make a mortgage payment for 6 months, so they should benefit from that too. And again, you still owe this money. Like, this isn't free. So sometimes it's educating the tenant that, it's important that I make you aware that my mortgage on this property has not been deferred. So, let's find a solution that works for both of us.
Right. And there'll be compound interest as well.
Yeah.
Brady, do you mind if I pick on you again?
Yeah.
For anyone that doesn't know, Brady's got a lot of property and he has his own property management business. Can you share how you're dealing with people with deferrals, rent abatements, anything like that?
Yeah, absolutely. So just like Claire mentioned, I think communication is the most important thing that any of us can do right now. When we're running business and everything's good as normal, it's so easy just to be distant. At that point, we don't need that intercommunication. It's when problems happen, non-payment of rent, if they're not looking after the property very well, if there's garbage being left around, the communication that you start engaging in is really what makes the difference. You could just serve notices, but the communication that you add to that notice, to the expectation, is really what makes the situation real for them. And as well, I think it really changes the course of what they do and whether they're going to do what you hope they do. So right now, I kind of stole, who did you have? There was that note, Erwin, somebody wrote, it was on Iwan, I forget exactly who it was. So we took that. It was a letter to the tenants.
Oh, Sarah, from Sarah Copeland. Yeah.
We took that. It was great. So thanks to Sarah for that. It was a great base. And we expanded on that just a little bit and just made it basically our policy, just like, that we're talking about now. We sent that to the tenants. And so on top of that, we said that it's most important that you let us know if there is issues. And when there is issues, we went one step further, and I could send this to you, Erwin, so you could send it to the group. We'll let you know how it works. Again, it's like we're living in like hour by hour, but what it is it's a document that communicates, who they are, the rent they pay, the stress they're in, what they intend to, and how they intend to pay us back. And as well as proof, it's a document so our staff can also make sure that we have collected proof. So it's basically a form, right? That it's a system that we're going to implement. That also, we do make sure that we collect proof and that they agree to something. So, I think what we're trying to do is like really make sure that everybody's aware we're in this together. Like, this is not their problem. It's not our problem. Like, none of us wanted this. But once they do that and they realize, like, okay, you are the landlord calling me to try to work with me here, then I hope, that our tenants are going to be compassionate about that and take this as serious as we are. And essentially, so that's what we're doing. We're sending the letter, and then we also have this other document that's collecting the information that they're going to sign and acknowledge. And then that's going to be the goal as to how we solve the non-rent issue.
Thank you, Brady.
Awesome.
If anyone needs these letters, just message me. So preferably email my team. We'll get you the letter that from Sarah Copeland, and if whatever Brady is willing to share. You'll all just need to tweak some of the utilities, for example, for your own neighborhood. So thank you, Kosh, for sharing. My brother-in-law works for Home Depot. They received the memo. They are going to be considered essential service from now on. So that's great news. I see a lot of heads nodding. Like that is great news. The other thing is, like, what inspectors are working right now?
Yeah.
I saw Manny posted a lot, and some of the utility companies, for example, electrical, are not installing new meters. Okay, so we're on to message post comment number 11 out of 94 new ones. Claire, how much more time do you have?
I'm going to be past my bedtime soon.
Oh, I'm half in the bag too.
I was going to say, that's what Sider doing.
I've been drinking this whole time.
We can't keep Erwin away from his birthday either.
Because I'm going to the club. It's Monday night.
Should we all hop on and sing happy birthday to everyone?
Oh,
Yes,
please no.
yes.
Why don't we do that? Everybody unmute themselves.
Okay, hang on. I'm gonna eject Brady right now.
You're gonna get your guitar out.
Which one?
Ooh, okay. Question from Brian Gordon. Does all the major banks offer private banking? From the rates that I've received, you don't want to find out the answer to that. Claire, comment? Any comment?
Yeah, I mean, basically, all the major banks have got private banking. It's their high net worth wealth line, if you like. Some are really good at it, some suck at it, and you'll find that out when you start to call them.
Apologies, I was thinking private lending. So when I was talking private lending from banks that I've seen,
God no.
Very pricey. Private banking. It's great if you qualify. It's not always easy to qualify. And I'm trying to qualify. For I've seen. I remember Christy McDonald posted on Facebook that she waited. I don't know. She was on the. I think she got a lot of people I've actually seen got hung up on by their banks. Maybe not intentionally, but they were on their phone for hours. Versus Tasha reported in no wait time.
Yeah. You get direct line with private banking. It's like you've got the hotline.
And that comes with a price. Claire, that comes with a price too. Don't you pay a monthly fee for private banking?
It depends. It can often be waived. It will depend on basically what your own liquidity is, what investments you've got with them, and it really does depend on your activities.
And code. Wow, we're okay. I'm not even keeping up with these. We're on comment number 12, and there's 98 new ones. Andrew Walsh is asking, where can I defer a payment on Scotia? I think you have to call right now still.
You do. You must. Your broker can't call for you. You must do it yourself.
And Simon Tam reports City of Toronto. Simon's a model. He's got it all. He's a model. He's a successful realtor. He's on TV all the time. City of Toronto building inspectors stopped inspecting last week unless emergency inspections. ESA will allow video inspection if they know the electrician well. Thanks, Brian Gordon. Wow.
That's good.
Oh, Brendan is an appraiser. Oh, I think we got through almost all these comments. I must have skipped a lot or something. I'm actively appraising residential homes right now. The market is definitely moving, lots of work. Perhaps that's due to other appraisers taking time off now.
Yeah.
Well, if anyone's looking for a job, I think Brendan Visser's looking for. I'm sure appraisal companies will be looking for new appraisers. City of Hamilton is doing e-plans behind the scenes. I thought City Hall was shut down. Who's actually working?
I think they're skeleton staff, right? Essential service.
It's true. I can't believe people are still joining. Excuse me. Whew. All right. Any final questions? Because we're over time, and I have to thank Claire and respect her time. Claire, any final words you'd like to say to people?
I would say the best truth is the one you hear yourself, straight from the horse's mouth. Like, so just because someone else got this at one bank doesn't mean you're going to get it. You might have a different rating. You might call a different customer service person. You might have a different portfolio. Mm-hmm. So I would just say one thing that's frustrated me is the amount of misinformation. And what one investor has experienced isn't necessarily a blanket statement that everyone can expect the same thing. So everyone's different, everyone's circumstances are different, and only trust or believe what you hear direct from your own lender on your own scenario.
Excellent. And do you have any dealings with Equitable Bank?
Yeah.
Have you heard anything from them on their policy right now?
No, business as usual.
Are they deferring month to month?
Oh yeah,
months,
they all are.
12
so
months?
They all are. So they're all doing sort of 6 months. No one's not doing it. Now, will Equitable Bank have a different qualifying criteria than RBC, for example, again, it will be based on the business you're in. Also, we've got to remember that if you're asking, so the government has come out with a lot of social assistance programs that are designed to supplement your income. So the hope is not as many people need to ask for a deferment, because they are going to get, EI or their income replaced to a certain amount. Definitely goes to your point, Owen, about people filing their taxes. If you feel 2019 taxes are going to be higher, it's going to increase your potential EI payment if you have to claim it. So file your taxes fast.
Sure, Tammy. I'm sure my wife would appreciate that.
Oh yeah, oops.
So,
Got nothing else to do at home. It's a great time to get organized. Get the kids to organize all your gas receipts into a pile and your restaurant receipts. And
Claire, where can people follow you, contact you?
yeah, absolutely. So you can just Google my name, Claire Drage. Also, the Windrose Group. We're on all social media platforms. And you can just email info@thewindrosegroup.ca, and we're happy to help any way we can.
And what kind of service do you offer? There's investor services beyond regular mortgages. What else do you do?
Absolutely. So I have a large team. I have about 84 mortgage brokers on my team. Ish. Today could be 84, I don't know. But over 80, and we're licensed from BC to Ontario. And basically our specialty is definitely with real estate investors. I'd say the one thing that does make us a little bit different is we do work with every bank. So we do work with RBC, CIBC, BMO, and National Bank, for example. Most mortgage brokers don't, but we feel they're vital to real estate investors' growth.
Fabulous. Thank you again for doing this. Thank you all. And we won't do these forever, but these are special times. This will be one of 4 that I think I'm doing this week. So tomorrow night we'll have Cherry Chan, who's an accountant, talking about taxes, talking about business incentives, business whatever that's being offered by the government to help you guys stay out of trouble financially, liquidity, all those sorts of things. Thursday night we have again continuing with this emergency webinar series. We have Lee Lowell, who is a very successful stock investor. So he'll be sharing what he's doing in this market. When he thinks this market will bounce back, and how, and also his stocks of choice. All right, so just stay tuned for all those sorts of announcements. I only found out at dinner time that Cherry's going to be our tomorrow's speaker, so there is no links or details around that yet. But just stay tuned. Follow me on Facebook, and don't unsubscribe to my emails, even though I get a lot of them. Thanks everyone for being on this. Remember, we are a community. Spread the word, share what you learned tonight to your friends and family, to your fellow investors, and get stuff in writing. If you get stuff in writing, please share it with the rest of us. And yeah, there is no free money, right? And especially, please share that with your tenants in Doug Ford as well.
Yes.
All right. Thank you, everyone. Thank you again, Claire.
Oh, my pleasure, Owen. Thank you. Anytime. Happy birthday.
Thank you.
Let's celebrate.
Thank you.